We come from a very, low middle income, low income background.
Did you come from a very conservative family and you got married at 19?
I think the men in my life have played a very powerful role. Just like life, investing is a marathon, it's not a sprint.
Alright, and you think this is a good buying opportunity right now?
So for me personally, like I said, I will continuously do an SIP. I'll probably increase my SIP amount during this volatility or when markets are in downtrend. Yeah. Between gold, debt and equity, our asset allocation is done, right? Again, women do this brilliantly. We've never put all our eggs in one basket.
Hello and welcome to Buzz by the Bay. March continues to unfold with the stories of inspiring women. Our guest today has had a remarkable journey and is a trailblazer who founded the first financial platform in India exclusively for women. Finance and investment expertise are clearly in her blood, and she has leveraged that knowledge to empower women with financial freedom. Very pleased to have with us the founder of LXME and promoter and director at Anand Rathi Share and Stockbrokers Limited, Priti Rathi Gupta. Welcome on the show, Priti.
Pleasure to be here, Anushka. Thank you for having me.
And happy International Women's Day, International Women's Month, as we are in. March is the month where women should be, of course, women should be recognized every month, but March has that particular feminine energy.
Yeah, absolutely. I think for me, just making Lakshmi happen means that every day is a Women's Day.
Absolutely. Well said. And Lakshmi, a platform which helps women invest independently, brilliant idea. And right now we are facing a lot of volatility. So more so than ever, a lot of young investors, women investors, need navigation from an expert like you. But first I want to talk about your remarkable journey because it's quite an incredible one. I've heard you say on previous interviews that historically there's a gap between women and money in our country, or there's a fear amongst women. Why is that so?
I think a lot of reasons. Somewhere I think the power that women actually had, if you go back to our olden times, the power that women actually had with their money, it's been lost in translation. Whether it is social conditioning, whether it is just the dynamic environment that's changed. I'll give you an example. My grandmother, my dadi, was I think one of the finest money managers I've seen. When I say finest, I mean she was actually, we come from a very, low middle income, low income background, and she had 5 children who she had to make sure that she had to educate. So she was very clear that they should all be well educated. And my grandfather used to run a shop. So all the money that he earned was actually given to my grandmother, who would then run the fiscal budget of the household, right? 2 things. One, I don't think there were investment options back then, so you didn't have the capital markets. But she was very deftly managing that money to make sure that there is enough saving, and that the saving is also giving her return. So the savings are working hard as well, right? I used to watch. I was very young, but I remember that she used to actually lend money against collateral, and I used to wonder and I could see that she was super sharp at it. And somewhere I believe that as the capital markets came about, I think our social conditioning got worse when it came to women. I think it just sort of translated into men will manage money because they do a better job. I think the access to capital markets for women was also a challenge. But it's never too late to correct that. I've always believed, I'm seeing not just my grandmother, but all the women who actually manage money, you will see that they manage it with the right discipline. They have the right attributes to make great money managers. Women fund managers today give you, 100 to 150 basis points better return than men fund managers. That's statistics. Right?
Really? Wow.
I'm not saying this because I'm a woman. So why not, have the women of our country actually start managing their money it doesn't just benefit a woman, it benefits a family, a country. What does it do to us as a country? It moves the needle, it moves the GDP needle actually.
Absolutely. So women should lead the way. So you're saying women are probably better at managing money.
It's absolutely the opportune time to give women that platform where they can, manage their money with ease, with simplicity, and I think time efficient. This is what I feel women we've always struggled with. Limited time, so much to do.
Absolutely, so much. Running a home, everything. And if you're a working mom and children and elderly people in the family, all those responsibilities.
Correct.
Yeah. So coming to Lakshmi, when did you start Lakshmi and what really inspired you? I mean, you were of course, working with your family firm, Anand Rathi, which is very reputed, one of the leaders in the market.
I think being in financial services as a woman, you can actually see that gap. It's so visible and it's disturbing. Because for the life of you, because you come from a background where you've understood money. I think I was lucky that my father, right from the time I was 16, made sure that I understand how money markets work, how financial markets work. But not every woman has that, privilege. And I couldn't understand why women were not participating. We actually rolled out, I think this was about 2016 or 17, where we rolled out an entire product in Anand Rathi, which was meant to reach out to retail investors and convert them from trading to really financial planning. Because I think SEBI's come with a report now, but if you were in the markets, you knew that people don't really make money when they're actively trading. I think I went to around 60 different cities and met different customers to just understand why is it that trading is so, they are really lured towards trading versus financial planning, and what really will help them get to the financial planning mode. There were no women. No women. So I was like, well, they're absent, right? There's a beautiful book that's been, which says The Invisible Woman. And it really felt like that there are no women there. And because there were no women there, obviously everything that we did was curated. Our communication, our product, our journeys, everything was curated towards men. So I think for me that gap was evident. I was in an HBS classroom and I was asked to, this was an executive education I was doing. And I was asked to, all of us were asked to present a new business that we would like to set up along with a strategy, and ideally something that's never been done before.
Yeah.
I mean, what could have been better but a platform for women, because that was at top of my mind for the longest time. I thought our country is demographically just so exciting for something like this.
Yeah.
We are a savings economy. We don't live on credit. Our mass middle income actually saves money and doesn't live on borrowing. Of course, things are rapidly changing, but it's still, when it comes to women, they're still savers. And then I said, okay, we've set up a wealth business which today manages about $20 billion of AUM. It took us about 20 years to set up that, and it's a very strong business, right, to set that business up. But if we could use technology, if we could use the fact that today every woman has access to a smartphone, she's there on the social media, she's active, her awareness is there, and reach out to her to sort of get her savings, even if they are small savings, to financialize.
Yeah.
It meant that we could actually build, the same amount of AUM, but in a smaller time. So the opportunity itself was also so huge, right?
Yeah.
It was a completely different target segment, just women, mass middle income. I came back from HBS with this whole concept of shared value.
Okay.
Which I thought was amazing. Your competitive edge, your sixth competitive edge is actually creating value not just for yourself but creating value for all stakeholders involved. So I actually stepped out of Anand Rathi.
You stepped out of it?
Yeah, to set this up because I think it was a calling of purpose, passion, and of course the opportunity.
So now you fully with Lakshmi, or you're still a promoter and director at Anand Rathi?
Yeah, so I co-founded Anand Rathi 30 years back with my father and husband.
Yeah.
But I sit on the board of two Anand Rathi companies.
Okay.
But I'm 100%, this is what I'm building, because I think for all of us, not just me, my co-founder Riddhi, and all of us in the Lakshmi team, this is a revolution.
How many users do you have, and can you give us some idea of your AUM and your users?
Absolutely. So it was in November 2020 that we started Lakshmi as a company.
Yeah.
And our first prototype of the app actually came out in 2021.
Okay.
It took us just 3 months to build it. We built it really fast to understand whether women will really invest. The core of what we built was community. I actually met about 4,000 women before we started Lakshmi.
Wow. Okay.
To understand, including focus groups, to understand, while intrinsically I knew what the problem statement was, but it was good to sort of document and hear from women that what were their various friction points. So we actually started as a community, which was a closed group on Facebook.
Oh, wow.
Because we wanted to also sort of validate whether we want women to manage money, but do women really want to manage money as well? Right?
Okay.
And we saw that the community grew by leaps and bounds within the first few months just by referencing, because it's a closed group.
Yeah.
So women were telling other women, hey, here's a place you can come and talk money, right? So we realized that the community is the most powerful force for us. I think community actually became our product managers. So the women in the community told us, listen, I have a banking app, I have a payment app. It's very hard for me to manage all of this given the limitation of time. Can you actually build all of this in Lakshmi? Because we love Lakshmi, we trust you, we know that it is, by women, for women, and love being part of the community.
Yeah.
So eventually what we realized is that investment is the core of what we're doing, but there are a lot of financial and non-financial pieces that you need to bring around for women to actually, or to make that journey very time efficient for them.
Yeah.
So then we sort of built, of course, we did an MVP on lending. We got in other instruments like fixed deposits, savings, we ran savings challenges. So essentially, the idea is really to create a full-fledged money platform where she can do everything money on a single platform. Took us about 3 years to come here, but today we have about 1 million women on the platform. We have about $4 million of AUM. This is very, very democratized because you have women who are making small amounts of investments, anywhere ranging, they begin at 100 rupees.
Wow.
But today an average investment is about 50 to 60,000 rupees per annum per woman.
I read some interesting statistics on your Lakshmi page, which says that 85% of women are not confident enough to invest in mutual funds, and 98% of women have no concrete financial plan for their retirement.
Actually, this was again, so when we were the Facebook community, Facebook actually funded a research for us because we were amongst the top 5 communities on their platform in terms of the engagement, in terms of the impact. And we actually, the first research on women, especially middle income women, what are they doing with their money?
Yeah.
And while we knew, the numbers, but some of those shocked us as well, right? For example, only 2% women were thinking about their retirement. Almost 70% women had no insurance. Not even a health insurance.
Wow.
Now, as a country, it doesn't come as a shock because we as a country are underinsured. But this was post-COVID, right? But I think the big kick for us was where, almost 78% women said that if there was a place where I could actually do, better things with my money, I could learn about growing my money better, I would love to be on that platform. I was just saying this stat yesterday, I read this and I was 75 million single women in our country, which is the population of Great Britain and Germany.
Wow.
Right? So because women are now choosing to get married much later, the divorce rates are going up, women are outliving men now. I mean, they have always, averagely the life of a woman is 4 to 5 years more than a man. So if you look across, the number of single women, especially in our metro cities, is rapidly rising. And therefore, the need and the active reaching out for saying, how can I now do better stuff about my financial security? What can I do about my financial independence? And I think that we have seen that shift towards, more and more, if you look at the AUMs of women in mutual funds, That has very rapidly increased. I think we've come from almost a 23% to about a 35% AUM today held by women.
Okay.
I think what we are truly excited about is that today women globally hold about 30% of wealth, right? Global wealth today, 30% is in the hands of women. Over the next 10 years, you will see that moving to 50% because of women either inheriting wealth or creating wealth themselves.
Wow.
Now that's a number that you cannot
you cannot ignore. Yeah.
Right? And therefore, I think the social dynamic that we've been struggling for the last 20, 30 years is very rapidly changing.
Actually, an interesting statistic that you mentioned in an interview I was reading, that women now account for over 25% of individual investors, right?
Yes.
So, some advice from you. Let's say a woman in her 20s wants to start off, doesn't have a huge amount of funds to start, and she's overwhelmed, let's say, by the complexity of the stock market. How would you advise her to start?
Great question. This is what I do every day.
Okay.
Anushka, yeah. So I think one, I truly believe that women, they've always put in money after they've understood what the money is doing, right? So I think first and foremost, educate yourself a little bit. It doesn't take too much time. But while you're doing that, today you can start investing with as little as 100 rupees.
Okay.
And I may stand outside a swimming pool and tell you, this is the stroke that you need to do, this is the stroke, and you can be standing beside me. Are you going to learn swimming? You won't. So I think you have to jump into the water.
Okay.
So start small, start with 100 rupees or 500 rupees. It's a cup of coffee, right? And once your money is invested, you will automatically want to learn about what's happening to your money, right? I think 2-3 things that every woman, as soon as she starts earning, must definitely do. First and foremost, get yourself a health insurance, because it's literally the risk cover that you're taking before you start this journey of investing. Start building an emergency fund first.
Okay.
Because at least 8 months to a year of your expenses, you should be able to create a corpus that meets those, so that if there is any sort of uncertainty that you have to deal with, whether it's your job, your work, if you're a freelancer, whatever it may be, at least your 8-10 months, a year of your expenses are taken care of. So first create that, and then start building your retirement fund. Again, the first question I get from people, but I'm too young, I'm just 25, I'm 30, why should I build? Retirement is long time away. And I feel women especially need to start building it, because one, our retirement is not only just when we turn 60 or when we decide to retire. We actually have mini retirements all the time.
Yeah.
Whether it's getting married, sometimes we have to step back from our career, whether it's having a baby, you step back. And it does take that, that there is a break every time in your career. So these are mini retirements, right? And prepare for those, start building for those as well as your retirement, because the earlier you start, the richer you get. And today you can start with 500 rupees.
Yeah.
So I think just with these 3 simple things, you can start your financial journey. I always say that begin with mutual funds, because mutual funds there is an expert that is actually creating a portfolio for you.
Yeah.
It is democratized, literally wealth management for every person. Also proven stats, mutual funds over the last 20-30 years have given you an alpha over the index or Nifty. And only 5% people have actually made more money than the Nifty by doing direct stocks.
Take a break from this financial talk and talk about your personal life.
Yeah.
You got married at a very young age, at 19. You said earlier you came from a middle class kind of background.
Yeah.
Your father worked with a big
with the Aditya Birla Group.
With the Aditya Birla Group. So you
Yeah.
probably lived in many cities across the country.
Yeah, correct.
But did you come from a very conservative family and you got married at 19? Little bit about your journey.
So, interestingly, my family is just it's not conservative at all. I was the oldest of 3 siblings in the family, with very young parents. I was born to my mother when she was 19.
Okay.
So she was 38 or 39 when I got married, right? So
Wow.
very young family. for some reason, I think my father and I was doing my bachelor's in commerce then. And I think he just decided, okay, it's a great time I keep joking with him, did you think I was running away? But did get married early. And of course got married in a slightly conservative family where, it was not a done thing for a daughter-in-law to work or to study. So I finished my graduation. I was registered for chartered accountancy, but couldn't follow it through because of the reasons. But I think what I've seen, and I really want to bring this out, is that I think the men in my life have played a very, very powerful role. Whether it's my father, at 16, he actually made me, when internship was not even a thing. He would call me to his office. He would say, here are our investments. I want you to look into it. Look at which are the dividend giving companies, tally all the dividends, etc. Yeah. Then he sent me to work with my uncle, who was a stockbroker.
Okay.
So for me, that understanding of capital markets, I learned very early on. My father-in-law, who I think was my biggest cheerleader. And then of course my husband, who's always, I think I don't always say that, okay, he supported me, but because it's a given, right? As a husband and wife, you support each other. But really to sort of be there, I remember when I started studying at SPJ and I had 2 young children. My youngest was 8 months old. And to take on and share that responsibility at a time where it wasn't a done thing. So I've always believed that for a woman's journey, I think men need to be an equal, they need to play an equal or a very important part in that.
Right. Okay.
Even financial journey, right? And I keep going back to this first post that we made on the LXME, when we started LXME on our Instagram handle, which said a man is not a financial plan, right?
Okay.
And it was meant to tell women that, listen, make your own financial plan. And it just went viral, that post. And we were like, oh my God, women are loving it. And then we realized that men are loving it more than women, right? So even today the men are saying that, it's important for you to also build your finance, don't just depend on us. But I think it's very important. We are very privileged. We sit in urban settings, but if you really go, every socio-economic level you go below, you realize that women do not have that agency. And therefore men have to play an important part in encouraging them in being, sometimes by just not interfering also. So when my husband wanted to set up stockbroking, I put my hand up. That was my opportunity. So I feel as women also, we have to just grasp at whatever opportunity comes our way. So I said, I know this business, I can set it up. That's how we actually started stockbroking. Okay. When I was just, I think, two years after my marriage.
So and I set up that
Rathi. This was actually called Navratan Capital.
Okay.
We took on the stockbroking membership of NSE then. NSE had just come about.
Right.
And that's how we started. And then of course when my father wanted to start his own company, and he said, listen, can we do, we can do stockbroking together. I have a Bombay Stock Exchange membership.
Yeah.
I'm more keen, he was more keen to look at financial consulting. So why don't we join forces and set it up? That's how Anand Rathi came about.
So your husband and your father.
Yes. Wow. And it sounds very dangerous, but yes, that's how it happened. And then from there on, I think, that journey just continued, building various businesses under Anand Rathi.
That's an amazing journey, Priti, really. Fantastic journey. Hats off to you. I mean, one would have thought, okay, married at 19, had your kids early, I'm assuming, that, you wouldn't, but you have helped build a company that is now a household name, a leader in the market. And you've been an instrumental part of that. And then it's great that you say that your father-in-law, father and husband all encouraged you. They wanted you to be a part of this. And clearly money and money matters is in your blood, right? You've always understood it, which is not something every woman understands. I mean, I can't claim to understand all of that. I marvel at people like you whose knowledge is so sort of expansive on these issues.
But Anushka, I have to stop you there. I think as women, we always undermine ourselves. I think we understand money really well. We may not understand, and not everybody has to understand the stock markets. You don't have to be an expert to sort of invest your money, right?
But now coming to the current capital market scenario, it is very volatile right now. I'm sure many investors are looking to people like you, women investors also, to navigate this uncertainty. The sentiment has reached the most pessimistic level probably since March 2020. Since September, just to recap some figures, the Sensex and Nifty have declined by over 17 and 18% respectively. I mean, are you seeing individual investors are now reluctant to invest? What are you seeing really in the market?
See, my belief has been that, just like life, investing is a marathon, it's not a sprint, right?
All right.
And it is the nature of markets to be volatile. I think it's how you navigate that volatility. And there are actually hacks that help you navigate this volatility.
Okay.
Which is what, like I was saying, nobody needs to be a stock market expert. You need to know these hacks that, okay, once I know this, I can manage it, right?
Okay.
I'm going to speak a little about, where we are in the Indian scenario. But before that, as an investor, I think the only two things that we need to do is do a very effective asset allocation for ourselves. Between gold, debt and equity, our asset allocation is done, right? Again, women do this brilliantly. We've never put all our eggs in one basket, right? But really choose that right allocation depending on your age, depending on your lifestyle, your responsibilities, your financial goals, and sometimes also your comfort. If you do not have a comfort with market volatility, you may not want to put a high amount of money into equities. Okay. But you definitely, I've always said that your sum total of the return that you get from all your investments should at least beat inflation. You should at least keep an eye on that and create your asset allocation accordingly, right? Once you've done that, all you need is the discipline to follow it, right? Which is essentially saying that if equity markets today, if I have 60% of my portfolio is equities, and when the market falls, and it's now the value of the equities in my portfolio has gone to 55%, all I need to do is rebalance, make sure it comes back to 60. Because the portion of debt has obviously increased.
Yeah.
So I remove money from debt and put it into equities to continuously maintain that balance. Now, we've heard the world say that you should buy cheap, sell expensive. When markets fall, you should buy. If you follow your asset allocation, the discipline of asset allocation, you are already doing that. During volatility, I've always said that investing via SIPs is a great way.
Okay.
Because you don't know how long this volatility or the downtrend continues.
Yeah.
Nobody can time the markets. A lot of people feel that, okay, the markets have fallen, so let me remove money, and when they go up, I'll put back the money, which is actually the worst thing to do as an investor, right?
Yeah, of course.
So continue to invest, but you may not want to invest at one go because you want to invest, you spread out your investing. Therefore, do an SIP. It's the best way to sort of keep investing your money. Yeah. So that's one thing. I think the second thing that I always sort of tell people is the only time that you need to change or relook your asset allocation is when there is a huge tactical shift in the markets. For example, when COVID happened, right? Now, when the markets crashed that deeply, if your portfolio said, I want to have, according to everything, 60% of my money should be in equities, at that point in time, you actually need to review your portfolio and say, now, should I continue to keep it 60 because the markets have crashed so much, or given, what the future is looking like, should I actually increase my equity portion into, in my portfolio?
Yeah.
So that asset allocation tactical shift should only happen when there are events like a COVID. Even today, whatever is happening, I don't think calls for a tactical shift.
You don't think?
I don't think calls for a tactical shift in your asset allocation. Today, I would, and the reason I'll tell you is because I think we as an economy, today we are the only economy that is still, growing at a 6.2%. And the reason currently our markets are going into this, this continuous sort of downward trend is because, for example, Japan is now suddenly come back to a 1.1% growth, right? So there is a lot of foreign money that flows into other countries, which may be turning the corner. But if you look at globally the world around, there's still a lot of confusion. If you look at the US, still a lot of confusion given, the markets that had shown those strength when Mr. Trump came into power. And then after the tariffs, there's obviously chaos everywhere. If you look at Europe, if you look at China, I think there is no market today that says, okay, this is without chaos or confusion. We are still very, very well placed as a country. For the next 10-15 years, we will continue to be the fastest growing economy. Where else should you put your money, right? This is where you need to stay invested. In terms of we have the youngest population, the highest earning population. There is no reason for us to take our monies away or put it into fixed income, etc.
Right.
So I think the outlook is positive, but having said, how long will this volatility continue? I don't think I have an answer. It could be 2 months, it could be 6 months, because I'm not somebody who times the markets. I've learned that very early on. Just keep investing. There is a lot of noise around you, and it's very hard to ignore that noise.
Yeah.
But I tell people, I mean, if you invest in a house, in real estate or in gold, you wake up every morning and say, okay, what's the price of my house today? How much is my gold worth today? And if I feel the gold price falling or real estate price falling, do I go out and sell my house or my gold? I don't do that, right?
Yeah.
So this should not be any different. I think this is an opportunity for every new investor. I think having been a part of these markets now for 30 years, enough experience to say that, hold on tight, there is nothing that you need to be really worried about.
So you've said a lot here that's very important. I'm just going to recap it. So you said this situation doesn't warrant a tactical shift in your asset allocation. So because we are hearing of people who are like pulling out of SIPs, first time investors, this is the first correction they're experiencing, so they're just getting very nervous and they're pulling out. So you're saying, but don't do that. Stay invested. It's a marathon. It's not a sprint.
Correct.
So you're not saying change your asset allocation. You're not saying like remove it from your SIPs or the market and put it into gold or into FDs. You're saying stay put the way you are.
Absolutely. See, when you do an asset allocation, Anushka, you've also made sure when you put say 40% of your money or 30% of your money in debt, that's what takes care of your near-term goals, right? For the next year, 2 years, 3 years. Which is why the rest goes into equities, which is meant to be there long-term.
So are you saying that because since October, Indian markets have been probably the worst performers amongst global markets. So do you think this is a run-of-the-mill healthy correction after 4 years of rallying?
Sure.
And a good run. Do you think this is healthy correction, or have we seen the worst? I mean, is the worst yet to come? Or you're saying you don't time the markets, but what's your view?
I don't time the markets. I think markets are a signal of what the future. So it sort of looks at the future earnings, but it also looks at what's happened in the past, right? If we have been the best performing market for the last 4 years, there is bound to be consolidation. It's literally like a marathon runner, right, who's been running continuously and then has to stop for breath, right? So it doesn't mean that you're not still the best placed market.
Okay.
This correction is taking into account the fact that you've run faster, right? So therefore there will be some amount of consolidation. There was overvaluation. In fact, it's a great opportunity. These consolidations actually give the opportunity to people to actually participate in the market. Because if you've bought something which was actually worth 300, but you are, right now it's been selling at 600, this is the opportunity for it to have come back at 300 for you to be able to buy it at 300. Problem is when people invest all of their monies. When markets are doing well, everybody wants to participate without understanding or without having the right asset allocation, without making an informed decision that equity markets will not always be unidirectional in the short term, right?
Yeah.
There will be times when they will fall. So are my near-term goals, financial needs taken care of via investing in debt? Incidentally, a lot of people also believe gold is a short-term investment asset class. So between gold and equities, you must always keep in mind that these are long term.
All right. And you think this is a good buying opportunity right now?
So for me personally, like I said, I will continuously do an SIP. I'll probably increase my SIP amount during this volatility or when markets are in downtrend. Because like I said, I would do my asset allocation. And that's the thumb rule I follow. That this is what my asset allocation needs to stay.
So just can you again just about this allocation, can you give us some idea of percentages again, if you could?
Yeah, absolutely. So I mean, there is a thumb rule, but please remember it is a thumb rule, right? Not everybody, I mean, personal finance is personal finance.
Because you mentioned hacks. Sorry, you mentioned hacks. That's why. If you could just give us a few of these
typically,
hacks.
I would say begin for somebody who's just starting, right? Say you are 25 years old. Then you follow a thumb rule of saying, okay, 100 minus 25. So about 75% of my savings should go into equities.
Okay.
Now the logic behind it is very simple. When you're 25, your expenses are not that high.
Yeah.
You should save enough, at least 20% of your earnings, and put it into equities, because you still have a long life ahead of you. You have a lot of financial responsibilities.
Okay.
And the only way to meet that goal would be to put money into equities, because that's what will give you inflation beating returns, right? So that's also a logic.
Yeah.
Lesser in debt, because at that point in time your responsibilities are not that much, right? And then as you say, when you turn 30, you change that asset allocation to 70 into equities and 30 into debt, right? Now that is that's a thumb rule, but now I may be 25 with no financial responsibilities versus my friend who is 25 who has a lot of financial responsibilities. Parents are dependent, siblings are dependent, right? Or already have children, so I have responsibilities. I may want to overlay my personal situation on top of this thumb rule to say, okay, now I'm going to move, maybe for me 75% into equity is a lot. Let me just keep 50% into equity, because I have a lot of near-term responsibilities. So overlay that, and once you've decided that percentage, as your age grows, rebalance it as per age, as per responsibilities. When equity markets really shoot up, you rebalance it the other way around. When the value of your equities becomes 80 instead of 75, you need to, that's when you sell your equities and move into debt and maintain that asset allocation.
Okay. What about gold, silver and these?
Gold, I typically club in that 40%, because typically it's also like a little bit of a hedge against your equity investments, because one, I think gold and equities are inversely correlated. A 5 to 10% of your portfolio in gold. And I always say this, when you say gold, it should be in gold investment. It doesn't account for the jewelry that you buy, etc. But if you already have that, then make sure that you're not investing more into gold.
So lastly, I want to come to last piece of advice. You mentioned, SIPs as the best way, mutual funds, SIPs, and that's your best bet. We have seen a lot, however, of correction in the small caps and in the mid caps right now. They've been amongst the biggest losers.
So,
what kind of SIP would you advise people to go in for? I mean, like a flexi cap kind of fund?
So actually, I've always maintained that, you ideally should, that's where I think an advisor, or the role of an advisor, becomes important, where when the dynamics of the markets change, are you really able to make sure that you're invested in the right set of equities, right? For anybody who is slightly less open to volatility, I think staying invested in large caps is always a great idea, right?
Okay.
Now if you want to make use of the fact that markets are, when the mid caps and small caps were doing fabulously well, an advisor should ideally be able to do that job of shortlisting and saying, okay, market dynamics have changed, and therefore these are the best funds for you to invest into. So right now I would say, like, have a large chunk of your money invested towards large caps.
Okay.
A lot of people also ask us, okay, then which fund in the large caps, right? And I think we have stats to say that no matter whether you choose the best based on historical evidence, choose the best versus the second best or third best, your returns will vary by maybe 50 basis points over a long-term period. So that's not the most important decision. The decision is to say, okay, right now I'll stick to large caps. So currently in this environment, I would, really stick to the large cap investments in my portfolio. I still do have some mid cap investments as well, and I would sort of, I think it depends on, again, how comfortable are you with volatility.
Right.
There are people who have portfolios completely in small caps even today, and I'm like, are you comfortable with this? And they're like, yeah, we're okay, we understand. So we've always advised them that move some amount into large caps as well.
Okay.
So yeah, look, a multi-cap fund is also a great idea, because there your fund manager is doing that job of asset allocation, between the large cap, mid cap and small cap based on that. So if somebody is entering today, I think it may be a great idea to start with a multi-cap fund as well.
Start with a multi-cap fund as well. Lastly, any particular sector that you're favoring at this point in the Indian economy?
So I don't really focus on, because I don't do direct stocks. I think about 10% of my portfolio is direct stocks. All of it is in mutual funds. So I would actually that's the biggest decision I make. I leave it to the fund manager.
Leave it to the fund manager. Okay, that's where experts come in.
Correct.
Well, thank you so much. You've given us some great advice, some great tips, and really fascinating to hear more about your personal journey. Again, happy International Women's Day, Preeti. Thank you for joining us on Buzz by the Bay.
Thank you so much for having me, and a happy Women's Day every day.
Thanks.